Ladies and gentlemen, the S&P 500 hit its 200-day moving average. So you know what time it is? It's time to start buying the dip a little bit at a time, because by my calculations, the S&P 500 could fall to about $400. Worst case scenario, down to about $360 per share. So there still could be some significant downside here, but if there is not, right now is a good opportunity to start buying the dip, because after all, most of the highest growing stocks, like your SoFis of the world, are down over 60% from their highs. So if the markets do continue to come down, most of the equities or just the cash in the markets are in your large cap stocks. So in my personal opinion, those large cap stocks would bring down the indexes, and you'd see the indexes fall, the large cap stocks fall, but you would see the smaller mid cap stocks fall less because they have already fallen quite substantially. Hopefully that makes some sense to you guys. But let's get into the top 3 stocks to start buying the dip on, and all of these stocks have over 100% year over year growth rates, and by 2025, that's what we're going to look at. What are these companies going to be worth per share in the next 3 years? So let's dive into this video. If you guys find value out of it and want more videos like this, hit that like button for me. Comment down below what is your top 3 stocks to buy on this dip, as well as subscribe to the channel. So let's dive into it. And first thing to know is that these are not day trades. This is not to say, hey, you should buy the stock and sell it in a month or 3 months or a year. This is really, well, I should say these are really like 5 to 15 year holds for me personally. And I know you guys will be excited about the first one. The first one is going to be SoFi. SoFi just got their bank charter approval, which adds about 25% additional positive EBITDA to their earnings over the next coming years and, decades. I don't think SoFi is going anywhere. I think $14.32 is a ridiculous price under its fundamental valuation. I think it's certainly a buy the dip opportunity on SoFi. After all, the worst price target we have is $16 per share. The best price target we have is $30 per share. And you even have Motley Fool and other news outlets talking about SoFi hitting $30 by the end of 2022, and this was as far back as just mid-December of 2021. So it's clear SoFi has over 100% growth each and every year for the foreseeable future, possibly even more than that now that they have the bank charter. And I think you're buying SoFi at some of the lowest levels you'll be able to get the stock for. Worst case scenario, could SoFi fall to $10 per share? Yes, that's probably your bear case, worst case scenario on SoFi. If it falls any lower than that, I will sell a kidney to buy more SoFi, because this is a 10x or more stock into the future. So if you put 10 grand into this 10 years from now, it'll be worth 100 grand or more. Obviously not a financial advisor here, but that is just doing the numbers and compounding that growth until 2030. So that's the first stock to buy the dip on. The second stock is going to be Lucid Motors. Lucid Motors, no surprise, is one of my favorite stocks, and you guys know this if you're subscribed here on this channel. We've hit a lot of Lucid Motors trades, and we have called out the SoFi bounces as well as the Lucid bounces. And Lucid right now is holding up very, very well. In a time where Rivian is getting crushed, all other EV stocks are getting beaten into the ground, Lucid is actually doing very well. A big component of this is the last share lockup that just happened 2 days ago, where any PIPE investor can sell all of their shares if they wanted to in Lucid Motors. Nobody sold. At least you didn't see the price of the stock go down. The price of the stock on that share lockup day actually rallied about 8%. So that shows you the level of conviction these PIPE investors have in Lucid Motors. And by 2025, Lucid is projected to be raking in about $22 billion in revenue, delivering over 250,000 vehicles. So if you value the company on that metric, if you're looking at a $62 billion valuation, yes, it is expensive, but Lucid is at the forefront of being the competitor to Tesla. And I think this, move that we are seeing with Lucid, the strength that we are holding up, is really solidifying that they will be the runner-up to Tesla. And considering Tesla is still almost a $1 trillion company, you could definitely see a 5 to 10x in the next 10 years with Lucid Motors, and that is certainly a buy. We do have the average analyst calling for 2025 the stock to be, or in 5 years, the stock to be around $120 per share. So considering the price right now at about 37, that's still about a 2x from where we are currently at. So looking good in all aspects as well. Not a profitable company, so if the sentiment does change dramatically towards EVs to the bearish side, Lucid is subject to get beaten up. Third, the last stock we have to talk about is one that flies under the radar all of the time, and that is Snapchat. After falling 60% from the peak, without a doubt, Snapchat at $33.42 per share is a clear buy, sitting at a $53 billion market cap. You do have people and analysts that are calling for Snapchat to be a $200 billion company in 5 years. So that would be a 4x, a 400% return from its current share price, with the revenue growing in that time frame 428.85% expected. So every $100 invested right now in Snapchat in 5 years by 2027 could be worth $528.85 per share. And a lot of this growth is going to be fueled in the fact that Snapchat has a lot of the younger demographics that will be growing up. And as they continue to grow up and use Snapchat and more people come on that are younger people or even older people, then you're going to see ad rates going up. Advertisers are willing to pay more for your, 18 to 35-year-old consumers than your older or younger consumers of a product. So I think the revenue and the growth is just going to continue. If you know any young person, they're more on Snapchat than they are on Facebook, or certainly on Twitter, or even Instagram. Snapchat really dominates the field when it comes to your younger people, your teens, your young adults. And I personally see that with a lot of people that I know. So that's basically the scoop in a nutshell. I know we could sit here and go through all of the nuances here with every company, but I think it's safe to say if you bought these companies right now on the dip, you're going to make substantial amounts of money in the next 5 years. And believe it or not, right now is the time to be buying stock, or at least starting to buy the dip, because people want to be super fearful and get all, crazy about the markets coming down. But that's what you want. Buy the dip, sell the rip. Buy low, sell high. We've all heard that, but nobody ever does that. They buy high and sell low because they let emotions get the best of them. And investing is all about not letting your emotions get the best of you. And for those of you guys that stayed till the end of this video, here is another cool little trade that I hit today, about 2,600%. So about a 16x increase, and that was actually on Disney. We do a lot of options trading, so if you guys want access to all of my trades, check the link out in the description of this video. I bought 2 Disney 147 puts for today at $31 for one, $32 for another. Sold one at $69, so I made the other one free, plus a couple bucks in profits. Woke up today, Netflix had bad earnings, which was why I was trading this, and Disney got clapped. So I did sell that last contract for $870. That was $31.50 into $870. All in all, about $900 in profit. Profits a 2,600 percent increase to equity on this trade. So pretty exciting. That's going to be all for this video. Like I said, let me know down below in the comment section what stocks you are buying on this dip. Share the information. Don't be greedy with it. Let me know what your trade is, baby. We all want to know. We all want to buy the dip. All of that good stuff. So that's going to be all for this video. Thank you for watching. I will see you in the next one.